Hey everyone, Sean here. Welcome back to Prompt to Profit. Last episode, we found our exit strategy. ATR trailing stops gave us nearly 9,000% profit on Tesla and reduced the drawdown to 59%. Today, we're flipping the question. The exit is locked in. Now we test the other half. How do we get in? This time, we tested 5 entry strategies designed by Claude. Then I threw in a wild card. Can you guess which one won? I'll give you a hint. It had zero logic. I first gave Claude our ATR trailing stop code from last episode and explained what I wanted. The exit strategy works. Now let's experiment with entry strategies. Give me some suggestions before we implement everything. Claude came back with 5 options, ordered from simplest to most complex. Dual EMA Crossover, where a fast-moving average crosses above a slow one. Pullback to EMA, which is buying the dip in an uptrend. Breakout with volume confirmation, a classic channel breakout approach. RSI Momentum entry, entering when momentum crosses a threshold. And ATR Breakout, which uses the same volatility measure as our exit. Quick tip for QuantConnect users. QuantConnect has a 32K file size limit. With 5 strategy classes, the code might get big fast. So I asked Claude to put all entry strategies into a separate file. Each one is a self-contained class with the same interface. Setup, should enter, is ready, warm-up period, and label. To switch strategies, you change one line in main.py entry strategy. Inside main, a method called checkEntry calls entry.shouldEnter with the current price and data. One config line to swap the brain. First round of backtests. Tesla, $100,000, starting in 2011. Same setup as always. Dual EMA, negative 54%, lost more than half the money. Only 28 trades in 15 years. EMA 50 over 200 is too slow for Tesla. Pullback to EMA, 996% profit, but 77% drawdown. That is actually worse than the 59% we achieved in episode 3. Buying dips works in uptrends. The problem is it also buys dips that turn into crashes. RSI Momentum, 1,250% profit, 65% drawdown. Second best so far in this round. ATR Breakout, 3,961% profit, 45% drawdown, not even close to the others. ATR Breakout enters when price pushes above a short-term moving average by more than 1 ATR. That means it only enters when volatility is expanding and momentum is strong. And because it speaks the same language as our ATR trailing stop, the entry and exit work together instead of fighting each other. For breakout with volume, 0 trades, nothing. The strategy was broken. Before we fix that, let me talk about something I noticed while reviewing the code. 3 of the 5 strategies had an EMA 200 trend filter baked in. That filter came from the episode 3. When I gave Claude our previous code base and asked it to add entry strategies, Claude kept the filter as part of its memory. The filter means, don't enter unless price is above EMA 200. It is a bear market guard, and it was silently shaping our results without us explicitly choosing it. This is the kind of thing you have to catch yourself. AI doesn't know what you intended to inherit and what you didn't. You need to review the code, understand every assumption, and decide deliberately. I brought this up with Claude, specifically about ATR Breakout. Claude explained that the entry signal already implies strong momentum. Price has to push above a short-term average plus a volatility buffer. The EMA 200 check could be redundant. So I asked Claude to add a toggle to turn the trend filter on or off. I also had to fix the volume breakout strategy. It produced 0 trades, which meant something was wrong in the code. When something looks off, push back on AI. I told Claude the strategy produced nothing. And after a couple of rounds of back and forth, Claude found the bug. It was using the wrong indicator for the channel calculation. Round 2. Fixed volume breakout, and now we test with the trend filter toggled off. ATR Breakout with trend filter off, 4,390% profit. That is 430% more than with the filter on, and the drawdown stayed the same. Without the filter, the strategy could re-enter after major crashes without waiting for EMA 200 to catch up. More opportunities, same risk profile. Volume breakout is now working, 1,521% profit, 50 orders, 47% drawdown. Pullback with trend filter off improved to 1954%, but the drawdown stayed at 66%. It caught more entries, but some of those entries were into declining trends that hadn't fully played out. More opportunity, but also more pain. RSI Momentum with trend filter off actually dropped to 1,062%. Interesting. The filter was protecting RSI from itself. Without it, RSI fired too eagerly during volatile conditions and got stopped out repeatedly. Not every strategy benefits from removing the guard. So we found our best entry strategy, but I kept thinking. We compared 5 entry strategies and ATR Breakout won. How much of that result comes from the entry signal and how much comes from the exit? There is one clean way to test that. Remove the entry logic entirely. Enter at random. If random entries still make money, then the exit is doing most of the work. So I asked Claude to build a random entry strategy. 5% chance of entering on any given day. Roughly 1 entry attempt every 20 bars. No indicators, no signals, just randomness paired with our ATR trailing stop. Claude called it the ultimate benchmark. I thought that was the perfect way to frame it. We use a fixed seed so the results are reproducible. Same random sequence every time you run it. Different seed, different entry days, potentially very different results. Seed 42. First run. 4,871%. 134 orders. 55% drawdown. No indicators, no technical analysis. Just a coin flip on any random trading day. And it beat our best engineered entry at 4,390%. One seed isn't proof. Random results vary by definition. Let's run more. Seed 67 came in at 795% with 78% drawdown. It happened to enter right before several major drops and spent more time underwater. Seed 87, 4,534%, back in line with the first result. Seed 134, 29,704%, almost 30,000. I ran it 3 times to make sure. That seed happened to catch several of Tesla's biggest multi-year runs from near the bottom. Lucky? Maybe. But even without the outlier, 3 out of 4 random seeds beat or matched our best engineered entry. Tesla is especially volatile. Maybe random entry only works when the underlying asset moves this much. So I ran the same test on 4 more tickers. QQQ was the one exception. Pullback to EMA won here at 611%. Random came in at 276 to 527%. Depending on seed, Pullback's dip buying approach suits this steadier trend-driven ETF better. Then SPY, random seed 42, 240%. Seed 134, 594%. ATR Breakout, 190%. On the most broadly diversified index in the world, random entry outperformed every engineered strategy. SMH, the semiconductor ETF random seed, 42 at 910%. More than double ATR Breakout's 384. Semiconductors trend hard when they move, and the trailing stop captured those trends regardless of when we entered. Apple was the most striking. Random seed 42, 2,356% with a Sharp of 0.92. ATR Breakout 779%. 3 times the return and a better Sharp ratio, all from random entry. Across 5 tickers, random entry won or tied on 4. The pattern is consistent. The exit is doing most of the work. Okay, so what do we make of this? Honestly, this is exciting. We set out to find the best entry strategy, and we found something bigger where the real edge comes from. The ATR trailing stop lets winners run during big trends and cuts losers when volatility contracts. If a stock climbs 300% over 2 years, it barely matters whether you got in on a Tuesday or a Thursday. The trailing stop catches the move either way. The exit determines how much of that move you keep. But here is the nuance. Random entry had worse drawdowns. 55 to 78% versus 45 for ATR Breakout on Tesla. A good entry gets you in at better prices with better odds of immediate follow-through, which means less pain early in the trade. So entries aren't useless, but most traders massively overweight entries and underweight exits. We just put a number on that imbalance, and the number is staggering. Your exit strategy is your real strategy. The ATR trailing stop carried random entries to thousands of % in profit across 5 different tickers. Entry strategies add real edge through lower drawdowns and better risk-adjusted returns. ATR Breakout had the best sharp and the lowest drawdown on Tesla. That matters when you are living through a 50% drop. But if you are spending 80% of your time perfecting your entries and 20% on exits, you've got it backwards. The data is clear. A random entry with a great exit beat 5 engineered entries across almost every ticker we tested. Spend your energy where the returns actually come from. Try these strategies on your own tickers. I tested Tesla, QQQ, SPY, SMH, and Apple. You might find different results on different assets. Drop what you find in the comments. 4 episodes in. Each step, we brought a question to AI. Each step, the data gave us an answer we didn't expect. That is the workflow. You think AI builds, data decides. Come back for the next episode. I promise it'll be worth it. If this was useful, subscribe and drop a comment. Did the random entry result surprise you? What would you have guessed before seeing the data? Code is on GitHub. Link in the description. Follow me on X at AI Quant Studio for updates.